All right, so I have an exciting video for you today. When it comes to monitoring interest rates here in Canada, things have definitely taken quite a turn this month of October in 2023. So if you've been following some of my earlier videos this month, initially when we started the month of October, there was the expectation there would be another quarter point interest rate increase as of the 25th of the month, which was just this past Wednesday. That came and went. The Bank of Canada basically held interest rates, and we've had quite a surprising change in expectations since then. If you're new to my channel, my name is Koukun and I am a realtor and a real estate investor. If you're interested in learning more about what we do, check out some of the free guides in the description, or you can book a call with me using the link in the comments below. All right, so let's get into it. So to start off, this was the announcement. So on the 25th, the Bank of Canada maintains their policy rate at 5%. This was widely expected by the interest rate options market, so it was in line with the expectation. One of the key news that came out of this meeting is that they expect the overall Canadian economy to grow by just 1.2% this year, 0.9% next year, and then back to 2.5% growth in 2025. These are revisions downwards, meaning initially their estimates were much higher both for 2023 and 2024. So they are letting the market know that they are no longer expecting the GDP to grow at those higher rates previously expected. And that has caused quite the impact in the interest rate options market. As of 9:10 a.m., on the 25th, this was the day the announcement was going to happen at 10 o'clock, this was the interest rate expectations. So there was roughly a 20% chance of a quarter point increase by December. Now keep in mind there is another interest rate meeting in December, so there were two sort of meetings that this probability was taking into account. A 5% chance of a increase by the following March. And already the market was starting to price in that there could be an interest rate cut happening by June of next year. And the probability of that was at 43%, significantly higher than what we saw at the beginning of the month. So here is how it looks right now. There is currently no expectation by the interest rate options market that we are going to receive another hike. All of the expectations across every time category is either for rates to stay the same or rates to revise downwards. That being said, again, this is just the probabilities as I'm making this video. These probabilities change every time a new piece of information is given. For example, like this revision downwards in the GDP, that has caused these probabilities to change. So it can very well change to the upside, but as it stands right now, there's a 6% chance of a cut by December. So again, very small chance, probably not going to happen. A 50-50 chance by March. So now you're starting to get to some reasonable odds and pretty much 100% probability based on these options that there will be a quarter point interest rate cut by June of next year. Now again, this far out, things can change. There's no guarantees, but basically the market is pricing in that they are almost certain, and they're willing to put money behind it, that they're going to see an interest rate cut by next summer. And now just for some context, when we started filming these videos on October the 2nd, the beginning of the month, this was the expectation in the market at that time. Roughly a 39% to a 65% chance of a further interest rate increase. Now, since then, we've received two pieces of information that have dramatically affected these probabilities. The first was the inflation data for September actually coming in less than August, and I think it was a move in the positive direction. The market sort of was happy to see that. And now this Bank of Canada GDP growth expectations, by them saying that they're expecting a weaker economy, the market putting two and two together is now pricing in that we've gone from a potential increase to now a potential decrease by next June. Now, it's still a little bit too early to tell, will this last pause spur up the real estate market? Are we going to see activity again? Are, homes that are listed for sale going to end up selling? It's still too early. We're going to monitor this closely and keep you informed. My guess is that once this information is more widespread, and if the average person sort of agrees with this idea that they expect interest rates to drop by next June, then we may see more buyers come into the market, and we may see more enthusiasm because they're expecting prices to go up, at least from these current levels, if we see that first interest rate cut. So again, too early to tell. We have quite a few listings on the market right now that we're hoping that we get some more activity on, but it is still too early to tell if this pause is going to help us in terms of getting more activity. I hope you found this video helpful. If you have any questions, feel free to comment below or book a call with me using the link in the comments below. Until next time, all the best.